Hello everyone. Welcome to the Stock Minds web channel. Zeta Global Holdings, NYSE Zeta, has emerged as one of the more compelling companies in the rapidly evolving world of AI-driven marketing technology. While the stock has faced noticeable pressure over the past year, the company's Q3 2025 results tell a far more encouraging story, one defined by accelerating revenue growth, improving margins, stronger free cash flow, and increasing analyst confidence. In this video, we will dive into Zeta Global recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Zeta Global. Zeta Global, founded in 2007 by David A. Steinberg and John Scully and headquartered in New York City, positions itself as an AI-powered marketing cloud. Its Zeta marketing platform, ZMP, blends identity data, machine learning, and omnichannel activation to help enterprises acquire, engage, and retain customers. With a vast proprietary opt-in consumer database and reach across email, social, web, SMS, and connected TV, Zeta has expanded through innovation and strategic acquisitions, establishing a strong foothold in the MarTech and AdTech landscape. Zeta Global Financial Performance. Zeta Global's Q3 2025 financial performance highlights strong momentum across key metrics. Revenue for the quarter reached $337.17 million, up 25.67% from $268.3 million in Q3 2024, while EPS improved sharply from -9 to -2 cents, a 77.78% increase. On a trailing 12-month TTM basis, revenue climbed to $1.22 billion, up 35.87% from $901.4 million a year earlier, and EPS improved from -69 to -11 cents, a substantial 84.06% improvement. Free cash flow per share, TTM, rose 37.04% from 54 cents to 74 cents. Profitability are okay with 60.84% gross margin, -1.86% net profit margin, and 13.03% free cash flow margin, with -1.98% return on assets and -3.92% return on equity, alongside a conservative 0.3 debt-to-equity ratio, indicating a stable balance sheet. Although profitability is still negative, this is expected since Zeta's EPS remains negative on a GAAP basis. Over the past 5 years, Zeta Global has grown its revenue at a 28.8% CAGR and its free cash flow at 39.1%. GAAP net income remains negative but is projected to turn positive in 2026. Zeta has demonstrated consistent growth over time, and the rapid expansion of its free cash flow makes the stock particularly attractive. Zeta Global Fiscal 2025 Financial Forecast. Looking ahead, analysts expect revenue in 2025 to reach $1.27 billion, a 26.76% increase over 2024's $1.01 billion, with non-GAAP EPS projected at 68 cents, up 4.11% from 65 cents in 2024. Wall Street analyst maintains a buy rating, with a consensus price target of $29.36, offering potential 73.93% upside, and a highest target of $44, implying potential upside of 160.59%. Zeta stock price performance and valuation. At the time this video was created, Zeta stock was trading at $16.88 per share. Zeta Global's stock performance has been mixed, with a -23.3% decline over the past year, significantly underperforming the S&P 500's 12.2% gain during the same period. However, since its IPO in June 2021, the stock has risen 104.1%, outperforming the S&P 500's 56.1% increase. From a valuation standpoint, Zeta remains attractively priced for a high-growth company, with a PS ratio TTM of 3.04, forward PS of 3.27, non-GAAP PE TTM of 22.56, forward non-GAAP PE of 25.62, and PFCF TTM of 25.44. Based on Fiscal.ai data, looking at valuation metrics since 2021, the forward PS, forward PE, and PFCF ratios are all below their historical averages. This indicates potential undervaluation, especially since Zeta Global is still projected to grow rapidly in the coming years. Zeta Global growth potential. Zeta Global growth potential remains robust, driven by several factors. 1. Accelerating revenue growth and market expansion. Zeta Global achieved outstanding revenue growth in Q3 2025, reporting $337 million, a 25% increase year-over-year and surpassing analyst estimates of $328 million. The company now forecasts 15.5% annual revenue growth, significantly higher than the U.S. market's 10.4% forecast. Management raised full-year 2025 guidance and projects 2026 revenue at $1.54 billion, a 21% increase from 2025, reflecting confidence in ongoing expansion. This consistent outperformance highlights Zeta's ability to capture market share in AI-driven marketing automation. The company's repeated beats on consensus estimates validate its strong market position and execution. With targets of $2.1 billion revenue by 2028, Zeta aims for transformative growth fueled by strategic initiatives including the Athena AI platform and the Marigold acquisition, positioning it for sustained double-digit growth through medium-term expansion. 2. One Zeta cross-sell momentum and multi-use case expansion. The One Zeta initiative is a strategic driver focused on expanding product adoption within Zeta Global's existing customer base, creating a strong flywheel for revenue and lifetime value growth. Data shows customers adopting multiple use cases such as acquisition, growth, and retention on the unified platform generate significantly higher revenue. For example, a large retailer consolidated 3 use cases, resulting in a contract 3.5 times larger than typical, while another retailer increased quarterly spend from $700,000 to $2 million after adding a use case. Year over year, the count of customers with 2 or more use cases more than doubled, accelerating multi-product adoption. The pending Marigold acquisition adds over 100 enterprise customers currently on single use cases, alongside 20 top advertisers and 40-plus Fortune 500 firms, substantially expanding the cross-sell opportunity. This approach increases switching costs, deepens customer reliance, and strengthens retention. 3. Strategic customer acquisition and Zeta Live pipeline generation. Zeta Global's Zeta Live 2025 event achieved record attendance with a 35% increase, generating a pipeline targeting over $100 million in additional deal closures, nearly doubling last year's figure. The event featured 38 sessions, 95 speakers, and over 120 product demonstrations to 1,500 high-value attendees, representing more than $100 billion in annual marketing spend. This strong engagement contributed to a substantial near-term opportunity, with management indicating the pipeline could surpass $100 million. The company's customer base expanded 20% year-over-year to 572, with particular strength in adding multi-use case clients, including the upcoming Marigold acquisition, which adds over 100 enterprise customers and top-tier brands. This momentum highlights Zeta's ability to accelerate customer acquisition, deepen client relationships, and boost revenue through strategic events and expanded product adoption. Risks to consider. While Zeta Global looks like a good stock, we should be mindful of potential risks. 1. Competitive and execution risks. Zeta Global competes in a challenging ad tech market alongside major companies like Google and Meta. Its success relies heavily on acquiring and keeping clients amid ongoing shifts in AI technologies and evolving privacy laws. The rapidly changing landscape demands careful execution. Any missteps in adapting to these regulatory and technological changes could slow revenue growth and negatively impact the company's profitability and market position. 2. Regulatory risks. Increasing scrutiny and tighter regulations on data protection and AI in the tech sector are raising compliance costs and operational challenges for Zeta Global. The company faces multiple federal privacy laws, like the American Data Privacy and Protection Act, with compliance expenses in the millions annually. Zeta invests heavily in data privacy infrastructure, AI governance, and consent management to meet these standards, but ongoing regulatory changes require constant adaptation, affecting its cost structure and operations. 3. Legal and financial risks. The company has recently been under investigation due to claims of improper board conduct and questionable financial reporting. Allegations include unethical data collection practices and inflated financial results, which have severely shaken investor confidence and caused a significant stock price drop. These issues raise concerns over Zeta's transparency and governance, potentially leading to lasting financial and reputational consequences if not addressed promptly and decisively. Conclusion: Zeta Global presents a compelling blend of strong growth, improving profitability, and reasonable valuation. The company continues to expand revenue at a rapid pace, strengthen free cash flow, and enhance its financial outlook, supported by rising analyst confidence and significant upside potential. Despite short-term stock underperformance, Zeta's solid fundamentals, AI-driven platform, and large addressable market position it well for long-term success. For investors seeking a high-growth opportunity at an attractive price, Zeta Global remains a promising investment candidate. But remember, this is not a financial advice. What do you think about Zeta Global? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.